is September 1st, and this is the video log. It takes 30,000 to a million. It's definitely going to happen. After I take you through the account, I'm going to show you my holdings and some of the moves that I've done, and after that I want to talk about the market and how I'm not looking for a big massive implosion or correction and what my reasoning behind that is. And I'm also not looking for any explosive moves upwards. And without crapping on the bears out there, I'm going to tell them why I think they're wrong and some things people might not have considered. Okay, so this is my second attempt at this video. I just did one and it turns out the microphone wasn't turned on. I don't know how that happened. I didn't change anything in the settings. So anyways, but I have made a little change for you guys if you like that, especially for all you mobile users. You probably see the screen a little bit better. I've made it easier to scroll through and to tell what I'm doing here. So you can follow along a little bit easier. Even the account tab, if I go onto it and you want to view the account, you can see that here. You can see how I have Apple consisting almost 50% of my account right now. Actually, it's more than that because I have options that are running against it. But anyways, to take you through what happened on Friday here, a little bit of EXK, a few gains, $24 up right now on the stock, but it's not bad for a few days worth of holding it. Better than holding an options contract for a month for $2,000, and actually it's $500 only invested, so that's pretty good. Now Apple is slightly negative. It's a little bit negative over here after hours or pre-market. But the silver market's a little bit up pre-market, so we're going to find out if some of those trends carry over through the day. Nothing really notable except uranium was a big mover. Now I own 900 shares of Cameco. 900 shares. Can you believe that? 900. So that's a lot. $8,000 worth of Cameco, and mostly because it's been grinding down and some of my put sales have been hitting. So I've been forced to buy some Cameco, and now my average entry price is $9.87, which is below the current one, but I'm okay with that. I have two more option contracts running, both of them for January 17th. One of them is a put sell. I wanted to use the opportunity to put $800 to work until January 17th, and the other one is a $11 call sell, and I want to try, of course, to sell calls above my average cost price, which is $9.97. So right now I have two options: sell here for a date that's a little bit further out and risk more potential gains, or risk potential losses and wait for the price to appreciate even further, like it has been bouncing off of its bottom here. If you go back a few videos, I noted that I think it's going to bounce off and not going to continue much lower, and it has been having a little bit of a bounce off. This little spike indicates a change of trajectory at the very least. I think it's going to have a bounce up at least until the $9 level here, where I'll be looking to sell $10 calls. That's my strategy with the chemical play right now. Energy Fuels and URG had decent days as well. $56 appreciation for Energy Fuels and erasing $35 of liability. So that's all great and groovy. Moving on to the topic of today. These are my options. Moving on to the topic of today, which is the S&P 500 and how I'm not looking for the S&P 500 to have a major drop downwards. Now, why? Well, I don't disagree. Not that my opinion matters, and I'm not some macro expert. I'm just going to tell you my thoughts, and you do whatever you want with them, alright? By the way, none of this is investment advice. Of course, you got to consult your own professional, advisors that you have in your area, and do your own research and due diligence, etc., because you need to find out if what you're doing is suitable for you or risk tolerance. So, anyways, take everything you hear here with a huge grain of salt. It's mostly for entertainment purposes. I just want to know how other investors are doing and get some ideas from them, or at least check out what their activities are. Hopefully you guys are watching this for the same purpose. It's not a good idea to copy someone's trades. You got to have your own character in the markets, and that what gives you an edge. That is what gives you an edge over everybody else. So I've talked about that before. But anyway, S&P 500 not gonna have a big drop. Why? Well, not because the fundamentals are great. Fundamentals are probably not great. Countries have increasingly put more and more regulations on business, more and more standards, raising the bar for newcomers, making it easier for the incumbents and so forth. Now, many countries are growing a little bit anti-business, which means pro-socialism, more control, less degrees of freedom for businessmen to do business, and so that all culminates in lower economic activity, less innovation, and so forth. So it is kind of a bearish outlook, but what I think most people don't realize is how strong central banks and politicians are when it comes to goosing all this stuff up. Central banks literally have control over the barometer, over the measuring unit, right? Over the measuring unit of the stock market. So they can and will and have been devaluing the measuring unit, which is the dollar in our case here in the States. But if you're in a different country, your central bank's been probably devaluing your own currency at maybe even a greater rate. In fact, I'm willing to bet if you're outside of the United States that the country has been devaluing their measuring unit by a greater rate, except maybe in the European Union or something like that. And guess what? It's not just market forces. Yes, market force is part of it, but it's mainly, if there was a will, right? If there's enough will, the central banks will control the value of the unit that you're trading with. They're trying to keep the prices stable, trying to keep away from panic, but they would probably rather have a little bit of panic and in exchange for controlled asset prices. So at least in the States here, people, central banks and politicians, and specifically, are very, very afraid of a big downturn in asset values. Asset value meaning housing prices, bonds, right? Treasuries, government debt, American government debt, stock prices, all these assets that big companies and wealthy individuals with power buy, like what I'm trying to do right now, buy and then take on debt in order to buy more. That's another reason why they want to keep things like interest rates low, so these debts are manageable, and not only are they manageable but profitable. So what do I mean by profitable? Well, if you take out $1,000 loan and you're paying 2% interest on it, but inflation is 3%, then you're actually collecting one free dollar worth of purchasing power, right? Well, I don't mean collecting, but you're beating the nominal value, the real value, I'm sorry, of that unit by a dollar. So it's basically free money if you are connected enough to get debt at a very, very, very low price. And that's why many smart, quote unquote, I mean, they're smart, many intelligent people out there will tell you to, quote, short the dollar by getting a mortgage. Like, for example, Warren Buffett says, or Robert Kiyosaki, right? He likes to double in debt too. But it's not just these two guys. They're just kind of people that everyone's heard of. But any really investor will tell you it's a good idea to have some debt at a very, very low cost if you can afford it, and buy real assets with it so you can collect the difference on that, right? You can create some cash flow just out of nothing, just like that. I mean, I try to have some debt, but I'm not as big a shot. Actually, I'm not a big shot at all, and so it's hard for me to get low percentage debt. So, but if I can, right, like in Robinhood, I'll try to turn it over investments that I think will pay off more in the future. Like, for example, the Apple leaps, which explains some of my Apple position. Leap, for those of you who don't know, is a long-term appreciation something, asset appreciation, something like that. I don't know, but it's basically long-term options. All right, and so that's kind of what I'm doing too. And so people, the powers that be, namely the politicians and the central banks, will want to preserve that status quo, and they'll fight it tooth and nail, and at the expense of everything, really, they'll try to keep it going, and they will because they have control. So if there is a big um, correction or bear market or crash in the market, it's going to be short lived. So, and not only that, but if I may take you into the SPY, which is a proxy for the S&P 500, it's an ETF, and pull out the 5-year chart, you'll notice that, hopefully notice now on your mobile phone with the enlarged display, you'll notice that the S&P is up 45% in the last 5 years. If you're good at math, you'll figure out that that's just about over 9, a little bit, it's about 9% per year over the last 5 years. Looking back at history, we find out that the average return per year is actually 8%. So the market is overshooting by just about 5% and the last 5 years, which is not that unreasonable. It's only 1 extra percent per year. Just a mild correction might take us down to the average, and I honestly see no reason why we should go too far below it. There's so many people waiting to put money in this market. Now we're probably gonna have some kind of bear scenario in this election year. Probably gonna have a lot of worries. Is the president gonna stay in, or is there gonna be some kind of Democrat replace them? Nobody knows really. Obviously, the outcome people speculate, and the market is actually kind of a good barometer for that a little bit, because this is kind of Trump's market, right? So it's unsettling if one were to speculate that Trump will be decrowned from the presidency, and therefore the country might take a different course. And so far, he's been a little bit negative on business, and more than negative, more than positive in some respects as well. So he made a cut to the corporate tax to make America competitive worldwide, so people won't have to start companies abroad so much, and so that was good. But then tariff wars for no apparent reason. Well, I mean, there is a reason, but I don't want to make this about tariff wars. Bottom end, bottom end, bottom line is tariffs are bad for economics. Everyone knows that. I mean, literally everyone. Now, businessmen know it, economists know it, history shows it. Like, the only reason why you'd want to do tariffs is, one, to raise revenue for your country. It's probably a better way to raise revenue than income tax and stuff like that. So it's one of the best ways to raise revenue, believe it or not. I've studied a little bit of economics. Now you can argue that point if you want. That's fine. I'll take your arguments in the comments. But it is still negative on the economy. The best possible case for an economy would be no tariffs, no taxes, no nothing. However, then governments wouldn't exist, which is a whole other topic. So if you want to have some kind of oversight and rule, then you're gonna need some kind of money, some kind of income, and tariffs is probably the least damaging form. So anyway, that's a whole different conversation. My point is that I don't think the market's gonna go down. Even if it does in the next year, over the election years, and with certain negative events happening worldwide, it is going to rebound pretty strongly if that does happen. And if it does, I'll be a buyer, just like I was a buyer over here in the bottom of December 2018. I was a big buyer, and things manifested in a pretty good way. I didn't buy the S&P directly, but I used Apple a little bit as a proxy, especially because it was going through some troubles on its own, and I thought it was a really, really good opportunity. Now, next time if that happens, I'll probably do the same, and I might actually even buy calls. If I run out of money, I'll be buying calls for some stocks like Apple and maybe other stocks. which was going to be pretty dramatic. So I'm kind of almost hoping that the market goes down this year and next, so I can get super aggressive and buy some major calls. And that's going to be, you know, probably leaps. I'll buy leaps. That's going to be very eventful, and a good opportunity for me to kind of skyrocket my account a little bit, because it's been sitting stagnant for the last few months, last 3, 4, or 5 months. Not huge action happening, so I want to spice it up. But I need the right opportunity, and I'm going to sit on my hands until that happens. Okay? Alright, this has been kind of a fun little video log. Anyway, let me know how you guys are doing with your accounts. Hopefully you're making more money than me. I'm not making any moves right now. I'm sitting pretty flat. Let me know how y'all are doing and what your gains look like. Hopefully you're beating me and the market. And yeah, I'm always interested to hear. Okay, I think that's about it. I'm gonna end it right here, and hopefully I'll make another video on Monday, which is tomorrow. All right, peace out.